That's the big prize, right? Is some sort of deal with China, and if the U.S. and China aren't even talking, and by all accounts, according to, they're not really having any sort of formal discussions that would lead in the right direction toward a formal sit-down discussion, that you're leaving out a big part of the imbalance, the biggest imbalance that the U.S. has. So you can talk trade deals with Japan and South Korea and India and other countries, but the real prize is that Donald Trump wants is a trade deal with China, and so far they're going nowhere on that.
David Rosenberg, a frequent guest on Bloomberg Surveillance, formerly of Merrill Lynch, he's a Canadian, and out with a tweet saying basically, hey everybody, I know you're focused on China, but you need to figure out something with Canada, because Canada is the big trading partner with the U.S., as is Mexico. Where do we stand, do you think, with Canada and Mexico?
Yeah, well, the Canadians don't sound like of course they're in they're in the middle of an election right now, and they don't sound like they're in any big hurry to do a deal. The Prime Minister Mark Carney said the other day, we'd rather have a good deal rather than a fast deal. So we'll see how that election plays out. That could dictate the course of any negotiations. But in the meantime, the Canadian economy is going to suffer. American auto companies are going to suffer because they rely so much on Canadian suppliers. So you could look for a lot more disruption the longer that drags out, with the cloud of uncertainty hanging over it, as it has for several weeks.
And Brendan, what about the big companies, let's say Walmarts and Targets or retailers? They have to replenish their inventories. Where do they stand in all this?
Yeah, so this is a big story we have out today, is that retailers like Walmart and Target, the big ones and small companies, are looking at those 145% tariffs on goods from China and saying, we can't do that. We can't afford that. That's more than twice what we could pay. So we're just canceling orders from China. And so what we're seeing is, in a couple of weeks, when those orders would have already gotten here, we're going to see volumes through U.S. ports go down. We're going to see inventories through warehouses go down. And the big retailers have even said privately to President Trump, according to our reporting, that this could mean shortages and price hikes. So the wave of decoupling that is underway between China and the U.S. hasn't really hit the real economy right now. We hear the administration say, oh, well, Wall Street has had a good run. It's time for us to focus on Main Street. Well, Main Street is about ready to get hit with some of this, and unless things change fast, then we're going to start seeing it in a lot of in some layoffs in industries like trucking and logistics and warehousing, where really the rubber meets the road between trade and the U.S. economy.
Are we past the point of no return, Brendan, in terms of some of the economic damage that could be done, in terms of supply chain not getting the stuff that we typically get?
Well, in the short run, if President Trump announced later today, which nobody would expect this, that he was freezing all tariffs, and he was going to try to do this another way. If he kind of backpedaled on everything, we'd still have a supply whiplash. All those canceled orders would be placed again, and we would have the volumes surging through U.S. ports. And we saw during the pandemic what happens when the nodes of supply chain get bogged down. Is we had 120 ships parked outside the port of Long Beach and Los Angeles. So that's the kind of thing. Most people don't think it's going to happen on that kind of scale, but the system can't handle big declines or surges in volumes, and that's what we're looking at over the next several weeks or a few months.